Hello everyone, welcome to EduTap and welcome to Finance 360-degree session. So in today's session, we are going to discuss regarding the enhanced transaction limits for the UPI. Okay, so this is a very big announcement that has been done, and we have to discuss the limits that have been enhanced in today's session. So let's start with this discussion about the UPI transaction limits that have been enhanced for various categories. We will discuss that what are these categories for which the transaction limits have been enhanced. Then we will also discuss about the new microsite that has been launched by the Reserve Bank of India. So this is a press release of RBI where the RBI has released the microsite, the new microsite for the banknotes. Okay, so give me a thumbs up if I'm clearly audible and visible and everything is fine. Now the third news article, I am going to show you that this news article actually we have already discussed in July month, and it is again in news, so we will see that how it was covered and such. Okay, and what are the important points. So these are the three news articles that we are going to discuss, or these are the three articles that we are going to discuss in today's session. The most important is the first one, which we are going to start with. Okay, and this article we have already discussed, and this is also very important. Okay, so let's get started, but before that, do subscribe to the YouTube channel of EduTap so that you continue getting the relevant videos, as well as do join our Telegram channel where you will get the PDF of the session, and the link for the Telegram channel is provided in the description box below. Okay, so let's get started with the first news article, that is implementation of higher per transaction limit for specific categories in UPI. So for specific categories in UPI, there is the higher per transaction limit that has been notified. Okay, so basically the NPCI on 24th August 2024 has increased the per transaction limit for entities under categories aligned to tax payments to 5 lakh rupees. So basically for tax payments, the limit was increased to 5 lakh rupees. Now the UPI is emerging as a preferred payment method, and most of the people, they are using UPI, they are preferring UPI over the other payment methods. So there is the requirement in the UPI to further expand the limits for the UPI transaction, because the people prefer UPI transactions. Okay, so there are requirements from the market on extending higher per transaction limits for additional categories of transaction in UPI. So basically for the tax payments, the limit was increased, the per transaction limit was increased for rupees 5 lakh. Now it is said that for other categories also, for insurance, for capital market also, the limit has to be increased, the per transaction limit should be increased. Okay, and that has been done, that we are going to see that for which categories the limit has been increased and how. So let's discuss that. Okay, so first of all, this is the article or circular that is released by NPCI on 28th August 2025, in which it was notified that the NPCI had increased the per transaction limit for the tax payments to 5 lakh, and now the NPCI is thinking of increasing the limits for other categories also. Okay, so the latest update has come. This has introduced the enhanced per transaction limit. So per transaction limit, the per transaction limit has been enhanced, as well as there is the daily limit that has been notified. Other than the per transaction limit, there is the daily limit that has been notified for multiple categories of person to merchant transaction. Remember this, that the enhanced limits are only for person to merchant transactions, the person to merchant transaction. The limits are not enhanced for person to person or peer to peer transaction. For peer to peer transaction, for person to person transaction, the daily limit is still 1 lakh rupees. The limit is still 1 lakh rupees. So for person to person transaction, there is no change in the limit, but for the person to merchant transaction, like you are paying for your insurance, or you are paying for your capital market investments and such. So person to merchant transactions, such transactions, in these transactions the limit has been increased, the daily limit has been notified, and there is the per transaction limit that has been increased. Okay, so I hope you will remember this, that the peer to peer transaction or person to person transactions, there is no change that has happened in the limit for this kind of transaction. Like you are sending your money to your mother, your brother, your father, your friends. So person to person transaction, the limit has not been changed, but for person to merchant transactions, there is the enhancement of limits that has been notified. Okay, now there is the enhancement of limits that we are going to discuss, but before that, there are certain directions that you have to understand. So first of all, the enhanced limits shall be for person to merchant, and which merchants? The verified merchants. So it's not like that any merchant, only the verified merchants, only for these verified merchants the limits have been enhanced. Verified merchants are those merchants that have the merchant identifier, that have these kind of course. Okay, so enhanced limits shall be applicable for merchants which are categorized as verified merchants. That means if let's say you want to send the money for the insurance, so there should be a verified merchant or there should be a verified entity that is collecting the insurance amount. Okay, so this is the idea, that the enhanced limits shall be applicable for merchants which are categorized as verified merchants, so that there is no fraud that is happening and such. Okay, acquiring member banks are required to ensure that such limit shall be provided to the merchants which are compliant to the NPCI UPI guidelines wherever applicable. So basically, if the merchants, they are collecting the money, like insurance aggregators or the insurance collectors, they are collecting the money, or for the investment in the capital market, the intermediaries are collecting the money, so it has to be verified by the acquiring member bank, by the collecting member bank that is collecting the money, that their merchants, they are complying with the norms, they are complying with the NPCI UPI guidelines. Okay, member banks may continue to be provided. So the limits have been provided. Now these are the maximum limits that is provided by the NPCI. These are the maximum transaction limits that is provided by the NPCI. Now the banks, on the basis of their risk categorization, on the basis of their risk understanding and the risk norms, the banks can decide the internal norms. That is, let's say the maximum limit is 10 lakh rupees, but the bank is deciding to keep the limit for the capital market transactions to rupees 6 lakh only, or to rupees 8 lakh only. Okay, so member banks may continue to be provided the discretion to set their internal limits. The maximum limits have been notified by the NPCI that the limit cannot be more than this, but the member banks can decide their own limit, on the basis of their internal policy, that is below the maximum limit. Okay, so member banks, they can continue to be provided the discretion to set their internal limits based on their internal policy within the overall ceilings prescribed by the NPCI. So overall ceiling has been prescribed by the NPCI. Now the banks can decide their internal limits, that is under the ceilings, that is under the maximum limit. Now the transaction limit for person to person, peer to peer shall continue as per the existing guidelines, that is 1 lakh rupees on the daily basis. And member apps, payment system providers, they have to take note of the advancement of the limit and undertake requisite changes and ensure the compliance with the requisite changes by 15th September 2025. So this is the idea. Any confusion, anyone? So by 15th September 2025, the compliance has to be done with the enhanced limits. Okay. Now coming to the limits. So here you can see that previous limit for capital market investment was 2 lakh rupees. Okay, for per transaction. Now the enhanced limit per transaction is 5 lakh rupees, and the cumulative limit on the day wise limit is 10 lakh rupees. Okay. For insurance payments, the previous limit was 2 lakh per transaction. Now the enhanced limit is 5 lakh per transaction. Okay, and the day wise limit is 10 lakh. For government e-marketplace, so for the government e-marketplace, or for the GEMS, for the government payments and such, like the government is paying for acquiring the tools, equipments for its departments, the tables and chairs for its department. So basically government e-marketplace, previous limit was 1 lakh rupees. Now it has been enhanced to 5 lakh rupees per transaction, and 10 lakh rupees day wise limit is there. Okay, for traveling, before the limit was 1 lakh, it has been enhanced to 5 lakh on the per transaction basis, and 10 lakh on the daily basis. Credit card payments, before the limit was 2 lakh rupees, now the limit is 5 lakh rupees on the per transaction basis, and 6 lakh rupees for the daily basis. Okay, collections, for different collections that happen, the limit is 2 lakh rupees for the, this was the previous per transaction limit. Now it has been enhanced to 5 lakh rupees per transaction, and 10 lakh rupees on the day wise limit. So these are the day wise limit, and these are the per transaction limit. For jewelry payments and such, through the jewelers to those merchants, the day wise limit was 1 lakh, or the per transaction limit was 1 lakh, sorry, but the per transaction limit was 1 lakh, that has been enhanced to 2 lakh for per transaction, and 6 lakh is the cumulative limit, day wise limit. Okay, so basically you can see that the limits, these are the enhanced limits. Okay, and the day wise limits have also been notified, that you can see here. Okay, any confusion, anyone? So effective from 15 September, now making high value payments seamlessly with the UPI. If you want to do the person to merchant payments, the high value payments can happen seamlessly now because the limits have been increased and day wise limits have been notified. The per transaction limit has been enhanced and the day wise limits have been notified. Okay, so for the capital market, for the insurance, you can understand that the per transaction limit has been enhanced to 5 lakhs and the day wise limit has been enhanced to 10 lakhs. Okay, so the limits you have to keep in mind. These are the limits. These are the enhanced per day limits, per transaction limits, and these are the per day limits that you have to keep in mind. Okay, and this was given by by the NPCI for the UPI transaction. The merchant codes have been notified. That is only the verified merchants. The UPI payments only to the verified merchants can have the enhanced limits. Okay, so these are the enhanced limits, the per transaction limits, and these are the cumulative daily limits. Now, coming to the next news article, that is launch of microsite for banknotes. The limits is important in the previous news article, so that keep in mind. A microsite, that is this microsite has been launched for the banknotes. So microsite is basically a smaller site with the, so RBI has a main site, okay, that is a big website of RBI. Now the RBI has also launched a microsite, a small site for the banknotes. This has been launched by the Reserve Bank of India. Okay, now this microsite provides members of the public, that is to the public, this website is provided for the public. Anyone can go and they can go to this link and they can go to the website. Okay, so anyone can go to this link and they can go to the website. Here you can see that anyone can see this website. This is the micro website of the microsite for the banknotes. So microsite provides members of the public a platform to access information on banknotes such as details of the design, security features through a 360-degree view of the banknotes. Multimedia, video, audio and animation has been provided for you to understand about the banknotes, and such interactive games have been provided with simple and efficient navigation so that the people have a better understanding of the banknotes, about their design, security features and such. So microsite also has a dedicated section for information on exchange of banknotes, and the new microsite replaces the earlier microsite that was Paisa Bolta Hai .rbi.org.in. This has been replaced by indiancurrency.rbi.org.in. Okay, so basically the microsite has been launched for the banknotes. It is available to all the member of the public, and this has been launched basically to make the people understand about the details and security features of the banknote and have the 360-degree view of the banknotes. This is the idea. Now coming to the last news article. So basically in July 2025, the SEBI had notified that the SEBI has allowed for the changes to happen in the InvIT and REIT, and we had discussed this session. We have discussed about this on July 17th, July 2025. So basically on 17th July 2025, we discussed that there are the changes that have been brought by the SEBI in the InvIT and REIT rules, in the Infrastructure Investment Trust and the Real Estate Investment Trust rules. And we had discussed that this is done for the ease of doing business for the Infrastructure Investment Trust and Real Estate Investment Trust. Now again the same article is again in news because from September the rules are being followed. Okay, so basically there is no change that has happened of the content that we had discussed in July 2025. So I'm not going to repeat the content. I'm only going to show you the important points. And if you want to see the complete session, okay, do see the July session so that you have the complete understanding of the rules and regulations that the SEBI has brought for the InvIT and REIT, the ease that the SEBI has brought for the REITs and InvITs. Okay, so that we are not going to discuss again, but basically the same news is again, or the same article is again in news just because it is being followed from September. Okay, so this is the idea. So we had discussed about the InvITs and REITs, that the InvIT Infrastructure Investment Trust and the REIT Real Estate Investment Trust. So there are the updates that the RBI that the SEBI has brought for the Infrastructure Investment Trust and for the Real Estate Investment Trust, so that there is easier guidelines that they can follow and they can expand more. Okay, so basically the amendments were brought in the InvIT and the REIT guidelines. InvIT and the REIT, they are the investment trusts. In the InvIT, this is the Infrastructure Investment Trust, where the investment is done by the investors so that the investment can happen in the infrastructure. Okay, and in the Real Estate Investment Trust, the investment is done by the investors, and the Real Estate Investment Trust is the pool of the money that invests the money in the real estate. Okay, So it was discussed that the related parties of the REIT and InvIT, the related parties of the sponsor or the investment manager or the manager, so the related parties of the REIT or InvIT, they shall not be considered as public unless such related parties are qualified institutional buyers. That means if they are the qualified institutional buyers, then the related parties of the REIT and InvIT can be considered as public. Okay, so related parties of the REIT or InvIT, they shall not be considered as public unless they are the qualified institutional buyers. That means qualified institutional buyers, if they are the related parties of the REIT and InvIT, they can be considered as public. They can be considered as public. Okay, now the sponsor group, the investment manager, the manager that is handling the REIT and InvIT, they can never be considered the public. Okay, irrespective of being qualified institutional buyers or not. So basically the related parties of the REIT and InvIT, they can be considered as public if they are the qualified institutional buyers, if they are the big institutional buyers. Okay, so related parties shall be considered as public if they are the qualified institutional buyers, but the REIT and InvIT, that is the sponsor, the investment manager, the manager or the project manager or the sponsor group, they themselves can never be considered public even if they are the qualified institutional buyers. So that is the basic idea. Okay, next is that holdco, that is we have discussed that if there is a holdco, there is a holding company. So before, the holding company had to send 100% of the cash flows that were coming from the REIT and InvIT. So if there is a holding company, previously a holdco had to distribute 100% of the cash flows received from the underlying SPV to the REIT and InvIT. So basically a holdco that is holding the assets through the subsidiary. Okay, so basically it had to send all the cash flows to the REIT and InvIT or to the main heads. Okay, even if the holdco was making losses, but now the holdco will not have to share all the profit or all the cash flows with the REIT and InvIT. Holdco, if it is making the negative, if it is having some negative cash flows, so it can cover its negative cash flows by using the money that is coming from the asset. So this is the idea. So basically previously a holdco, a holding company that was holding the assets on behalf of the REIT and InvIT, so it was required to distribute 100% of the cash flows received from the underlying SPVs, from the underlying subsidiaries, from the underlying assets to the REIT and InvIT. Now the negative let's say the holdco was making losses. Still, even if it was making losses, it had to transfer all the cash flows from the assets from the special purpose vehicles to the REITs and InvITs. Now they will not have to do so. Their holdco, having the negative cash flows or having the losses, can cover its losses, and after that whatever cash flow is left, that can be sent to the REITs and InvITs. So this is the idea. The last one is that the minimum allotment lot in the primary market. So we have already discussed this, that's why I'm not going in depth. Basically we have discussed this news article in depth in the July month, so I'm just going to cover the basic idea that you can see. Okay, and if you want to get the detailed understanding, you can go and see the July session. If you have already seen the July session, then this is the revision for you. Okay, so minimum allotment lot, see, if there is the private placement of the InvIT that is happening. Private placement of InvIT basically means that the InvIT is not placed to the public, to the general public. InvIT is being privately placed. It is being privately sold to the big investors and such. Okay, so InvIT is privately placed. It is privately placed and is being sold to the sophisticated investors, to the big investors. So this is the private placement of InvIT. When the InvIT was privately placed in the primary market, that is the new units of the InvIT is being sold to the investors. So there was the limit, there was the minimum limit of 1 crore or 25 crores depending upon the investment mix. There was the this much of the minimum investment was required in the primary market. While in the secondary market, if the units are being sold, if the InvIT's unit are being sold among the investors in the secondary market, the limit or the minimum lot size was 25 lakh. So you can understand that it was different if there is the InvIT that was privately placed, that was sold to the sophisticated investors. So in the primary market, the lot size was of 1 crore or 25 crores. Okay, in the secondary market, the lot size was only of 25 lakhs. So you can understand that in the primary market, it was very hard for the investors to invest because there was a huge amount that had to be invested, okay, in the lot. Now the reduction of minimum allotment lot has happened in the primary market. The primary market and the secondary market are being allied, and so in the primary market, the limits have been changed from 1 crore or 25 crore to 25 lakh to align it with the secondary market. Okay, so this is the idea that the reduction of minimum allotment lot has happened in the primary market for privately placed InvITs to rupees 25 lakhs in alignment with the trading lot size in the secondary market. So this is the idea. Any confusion here? So if you had already seen the July session, then this was a revision for you. If you have not seen the July session, I will suggest you that go and see the July session, because the articles in the July session are also very, very important. Okay. So basically, there were the rules that have been brought for the REITs and InvITs. The rules have been eased. You can understand that the lot size have been decreased in the primary market for the privately placed InvIT to 25 lakhs. Okay, to 25 lakhs. This is the same as in the secondary market. As well as the related parties, they can be considered as public if they are qualified institutional buyers, and the holdco, if it is making the losses, it can cover its losses from the cash flow from the assets from the special purpose vehicle. That is the idea. Now this is the first question. I hope you will be easily able to answer this question. This is the question from the UPI enhanced limits. So you need to remember the UPI enhanced limits, because in the previous years we have seen the direct question from the UPI enhanced limits. Okay. So read the question, tell the correct statement. So you have to tell that which of the following statement is or are correct in regards to the enhanced limit. The second news article is regarding the microsite. So the microsite is for the banknotes, and do tell me that which of the following statement is correct regarding the microsite. Okay. The last news article, it is from the InvIT and REIT direction. Okay. So I will suggest you that do see the complete direction that I have discussed in the July month, and I have given you the brief revision points, because if you have seen the July session, then you will be able to recall it, and if you have not seen the July session, then do see that session, and here I have provided you the revision points and the important points. Okay, so do try to answer this question. As well as there are the different series that we have brought for you. The government schemes series is for Monday. It happens on Monday, Wednesday, Friday at 10:30 a.m. This is for your schemes, for your schemes coverage. Then there is the descriptive answer writing perspective 360-degree series for your descriptive answer writing. This happens on Monday, Wednesday and Friday at 5 p.m. Then there is also the finance 360-degree series. That happens like for your RBI notifications, for your RBI press releases. This happens on Tuesday, Thursday and Saturday at 10 a.m. And then you also have the daily current affairs series that happens on Tuesday, Thursday, Saturday at 5 p.m. Okay, so this is it for today. Thank you everyone. Thank you for joining. Do give the right answer of the homework question. If there is any confusion, you can write it in the comment section below. So thank you everyone. I hope everything is clear. If there is any query, if there is any confusion, if there is any query, write it in the comment section below. Okay, so thank you everyone. Thank you for joining.